Today, we are reviewing Swing Master EA for MT5. At first glance, the forward test does not look bad. But when we look deeper, the long-term backtest raises some important concerns. So in this video, I will focus on 4 points: the forward test, the backtest, the trading style, and the real risk behind the trading logic. First, let's look at the public forward test. Swing Master EA has been running for about 27 weeks. The growth is around 12%. The profit factor is 1.34, and the win rate is about 74.6%. So, the forward result is not terrible. It has not collapsed, and the account curve is not in a dangerous freefall. But at the same time, it is not extremely impressive either. The profit growth is modest. The profit factor is acceptable, but not very strong. So my forward test evaluation is simple. It is okay, not bad, but not enough to fully trust the EA. One important point is the relationship between win rate and loss size. This EA wins often, but the average loss is larger than the average profit. In the public forward data, the average profit is about $5.93. The average loss is about minus $12.95. That means this EA relies on many small wins, but when it loses, the loss can be bigger. This is not automatically bad, but it means the risk-reward structure is not ideal. Now, let's look at how it trades. Based on the settings and trade history, Swing Master EA appears to use limit orders. In simple terms, it looks like a mean reversion style strategy. Price moves. The EA waits with a limit order. Then it aims to profit from a rebound. This is different from a pure breakout strategy. It is closer to buying after a drop or selling after a rise. Here is the forward trade history plotted on the AUDCAD M15 chart. White arrows are buy trades. Red arrows are sell trades. You can see that the EA often enters after price has already moved in one direction. On the H1 chart, the same tendency is visible. It does not look like a classic trend-following breakout EA. It looks more like a limit order reversion strategy. The good point is that it does not look like a classic grid or martingale EA. I do not see aggressive position stacking, and the trade frequency per pair is not extremely high. So this is not the type of EA that opens many positions again and again in a short time. However, lower trade frequency also means one thing. It takes more time to judge the real performance. A few months of forward data may not be enough. The sample size is still limited, so we should not overrate the current forward result. Next, let's move to the backtest. I tested Swing Master EA myself on AUDCAD. The test period was from January 2005 to April 2026. The initial deposit was $10,000. The lot size was fixed at 0.01 lots. The spread was variable, and I used the provided set file. With the set file, the result was profitable, but the total net profit was only $143.96 over about 20 years. That is not a strong result. The profit factor was 1.21. The recovery factor was 2.09. The maximum equity drawdown was $68.92 at 0.01 lots. The drawdown itself is not huge in absolute value, but the return is also very small, so the risk is not extreme, but the reward is not very attractive either. The most important point is this: the performance is much better after 2018. But before 2018, the result is weak and mixed. This is a major concern, because if an EA works mainly after a specific period, it may be optimized for that period. This is why I see a possible over-optimization risk. The EA seems to fit recent data better, but long-term robustness is questionable. The developer's backtest also appears to focus mainly on the period after 2018. That does not prove over-optimization, but it is a warning sign. I also tested the default settings. The result was weaker. The balance curve was not impressive, and the total profit was only $30.30 over more than 20 years. With the default settings, the profit factor was 1.11. The recovery factor was 0.60. The maximum equity drawdown was $50.23 at 0.01 lots. Again, the drawdown is not huge, but the profit is too small. This suggests that the EA depends heavily on the set file. In other words, the set file matters a lot. With the set file, the result improves. With the default settings, the edge becomes very weak. This means users should not assume that the EA will work well on any broker, any pair, or any market condition. The result may depend heavily on the specific settings. So, what is the real risk? I do not think the biggest risk is grid or martingale behavior. The bigger risk is the combination of three things. First, the average loss is larger than the average profit. Second, the EA seems to work better only after 2018. Third, the performance depends strongly on set files. That makes long-term reliability questionable. Here is my final take. The forward test is okay. The EA does not look like a dangerous classic grid system, and the current public result is not bad. But the long-term backtest is weak. The default settings are especially weak, and the improvement after 2018 raises a possible over-optimization concern. So I cannot rate Swingmaster EA as a highly reliable long-term EA at this point. It may perform well in recent market conditions, but I would be very careful before trusting it for long-term live trading. My conclusion is this: forward test, okay. Back test, caution. Long-term robustness, questionable. Watch carefully for over-optimization.